with an S&P 500, Tim Stenovec, at a record high.
Another record high. I think 56
Yep, 56
is the number for the year. But it's not a very broad-based rally. It's pretty concentrated in consumer discretionary and tech. So, not broad-based, but still what? Up 0.6%, Emily. Nothing to shake a stick at.
No, and volatility is very low. We have the VIX at a measly 13 right now, as I guess people are just ultra bullish on stocks. No fear on Wall Street.
They're ultra bullish, even though the eco data has been coming in somewhat mixed. You look at ISM services, which disappointed. And if you look at the Eco Surprise Index, which tracks how often data points come in better than expected, it peaked in mid-November and has kind of been, plateauing since then. But the S&P 500 up almost 4%, and the Russell and the Nasdaq up about 5.5%.
Which then raises a question, like, is everything too awesome? And if you're dealing with sort of funds buying into the end of the year and then some FOMO in the retail market, does that wind up then reversing, say, in January and February, based on the economic fundamentals?
Interesting to see discretionary stocks as well as some of the software stocks getting a strong bid today. Seeing some weakness out there right now when it comes to home builders, as well as a lot of the commodity stocks as well. Yield slightly lower here on the day, and we talk about a dollar. They had been exhibiting some pretty decent strength, unchanged here on the day. Bitcoin higher by 3%. As far as your equities goes, we get the closing bells here in New York being rung over there at the NYSE by Deckers, and over at the Nasdaq by Robinhood on a record day for the S&P and the Nasdaq, 37 points higher on the S&P to 6,086 and change, up 0.6%. The Nasdaq Composite up about 1.3%. The Dow Jones Industrial Average above 45,000, up 0.7%, and the Russell 2000, which has been oscillating between gains and losses, finishing higher by 0.4%.
Romaine, you can finally go and get that pair of Hokas you've had your eyes on.
No.
You swing down to the New York Stock.
I can never respect anybody who wears Hokas. Sorry, Tim.
All right, just me. And then, hey, you actually had fewer stocks in the S&P 500 move higher today. 232 stocks advanced, while 270 declined, despite the fact that the index did move higher. Speaks to the stocks that did move higher, which were the large market cap names.
And with the S&P and the indexes really climbing to session highs near the end of trading, we saw more sectors finishing in the green than perhaps just 10 minutes ago. Tech, consumer discretionary and communication services, those are your big techie sectors leading the advance. But you also have positive marks for industrials and utilities. The big laggard here on the day is energy, losing 2.5%.
All right, let's talk about some of the stocks that did move higher. I got the gainers today, and we got a record for Salesforce, higher today by 11%. We can go ahead and round that up, closing at its highest ever, 367.87. Salesforce shares hitting a record. The company reported that better than expected quarterly revenue. Look, for decades they've been selling this CRM software, but they've pivoted to this AI strategy. They're focusing on these agents. They're designed to complete tasks such as customer support or sales development without human supervision. Investors are certainly happy what they heard on that call yesterday. Taking a look at shares of Amazon, which today rose in the wake of the company's reInvent Cloud conference. Analysts said underscored its potential with AI. Shares higher by 2.2% today. Investors certainly liked what they saw. Here's what we learned over the past couple of days. Amazon stringing together hundreds of thousands of its Trainium 2 semiconductors into clusters that are going to make it easier for Anthropic to train the LLMs that are required for Gen AI and other machine learning. Shares higher by 2.2%. I think we're still getting earnings, Romaine.
Yeah, this involving Five Below. Of course, the big headline, though, out of Five Below is that they have actually found a new CEO. Remember, their last CEO left earlier this year. They've been with the interim CEO since. We're now learned that Winnie Park has been named the new CEO over at Five Below. This comes on the back of some of their earnings that are out. Comp sales in the most recent quarter, a surprising gain of 0.6%. The street was looking for a drop in comp sales of about 4.4%. So a big beat there, though EPS is a big miss. EPS coming in at 3 cents a share. The street was looking for 17 cents a share. And here's your forecast going forward. The company's saying net sales, I'm just going to give you the full year number, 3.84 to 3.87 billion. That range is higher than the previous range that it had of about 3.7 to 3.8, Alex.
Yep, so they wind up guiding a little bit higher than what the street was estimating. And also, it just really pairs to the point of the retailing signal is very confusing, right? You have Foot Locker getting hammered, Deckers closing at a record high, and then Five Below coming in quite strong with that new CEO and that guidance boost. So it's not a straight line when it comes to the consumer, that idiosyncratic story coming out to play here.
I'm just looking through the press release, and they're talking about solid Black Friday weekend results, encouraging start to the holiday season, but the highest volume selling days still lie ahead, and how overall they were pleased with overall strong performance and operational execution. That's going to be key. That's about managing your inventory.
And I was just looking through Winnie Park's resume here. She was most recently at Forever 21, but she used to be the CEO at PaperSource. I still love PaperSource.
Really? PaperSource is so expensive, though. It's like $800 for a card. Yeah.
Well, she's got a long history in this business, including working for things like Dockers, Levi Strauss as well. So it looks on paper like she's got a pretty good qualifications for this job.
All right, well, that stock is higher, but I am also looking at some decliners. Scarlett had mentioned energy down, and Texas Pacific Land Corporation was the worst performer on the S&P 500 on the day. Biggest intraday drop since March 2020. Oil and gas stocks more broadly are falling as tepid U.S. economic data raises concerns about crude demand. Traders also seeing negative technical momentum on oil after WTI failed to hold above $70 a barrel. We're talking about retailers. Foot Locker was down as much as 20% today. It did pare some of those losses, closing down only about 9%, but still pretty rough for this stock. They cut their full year sales and profit forecasts due to increased discounts and decreased consumer spending ahead. Not a great mix for a retailer. The company's CEO, Mary Dillon, attributed the decline to consumers becoming more frugal and seeking better deals. And then finally, Shift4 Payments, the biggest drop in that stock since April 2023, falling as much as 13% after President-elect Donald Trump nominated the company's billionaire founder, chairman, and CEO, Jared Isaacman, to serve as NASA administrator. Isaacman will stay on as CEO until the nomination gets confirmed. We saw a downgrade over at Bank of America on that stock, ticker 4, again falling about 13% today.
Okay, back to retail and earnings. Shares of American Eagle Outfitters down 6% in the after hours. The company coming out with numbers. Third quarter net revenue coming in just shy of estimates. I mean, barely shy of estimates. 1.29 billion. Estimates were for 1.3 billion. American Eagle third quarter adjusted EPS coming in at 48 cents. Estimates were for 46 cents. Third quarter adjusted EPS did beat estimates. Still, shareholders in the after hours sending shares down by 9%.
All right, I'm taking a look at synopsis here. On the surface, the earnings actually came in pretty solid. Earnings coming in at about $3.40. That beat estimates. Also, revenue coming in at $1.64 billion. What I'm scratching my head here, though, is when it comes to their outlook for the first quarter. They're looking at a range on earnings from $2.77 to $2.82. That's coming in pretty strong. And then you also have adjusted revenue for the first quarter on the high end coming in at 2.82. I'm going to assume that that's billion. No, for earnings, and then for revenue, 1.47 billion on the high side. That looks a little light compared to estimates, so I'm going to have to read in a little bit on that. That stock down 8%.
Yeah, just looking back at the American Eagle, because the retailers always do give us a good read into the consumer. Their CEO said that the company was led by a strong back-to-school season, achieving comparable sales growth across brands and channels, and delivered adjusted operating income at the high end of our guidance range. But still, that stock down almost 9%. That net revenue missing estimates coming in only at $1.29 billion. Versus estimates of $1.3 billion. So not too much of a miss, but a miss nonetheless.
The company saying that inventory up about 5%, a healthy level according to it, right around $804 million. We're still awaiting some earnings out of additional retailers. That includes PVH Corp. Of course, what is that? Lee Jeans, if I remember correctly.
Also, that's not
Calvin Klein. Thank you to our producer for updating us on that. But it gets to this idea of what people are buying this holiday season. I don't know. You raised this issue earlier, Alex, when we were talking about Foot Locker, whether that is just an idiosyncratic story, because Foot Locker was, of course, struggling long before this holiday season, or is that indicative of a broader trend in retail right now?
Yep, exactly. And then you're going to see the bifurcation versus just sort of a big sweep. Like I mentioned, Deckers, say, closing at a record high.
Or you have to have management that knows how to spearhead a turnaround. You look at Abercrombie & Fitch, for the past year, it's gained about 109%. And American Eagle, in contrast, up 4.6% over the past 12 months.
Wow. Can't pretend to understand where the trends are going.
Remember when once upon a time they were kind of interchangeable?
Yes. Yeah. That's not the case
I thought
anymore.
they were the same. It was like Abercrombie & Fitch, what was it, Hollister?
American Eagle.
what was the other one? I don't know, a bunch of
Aeropostale.
others.
Aeropostale.
Aeropostale. Yeah, all those places. Yeah, look at us. Trip down. Emily's like, what are these old people talking about?
No, those were my stores.
As I'm sure Emily will now tell us. But, you know, I think it does raise the question when it comes to tariffs, too, how they wind up managing their inventory if we have any tariff issues that wind up coming on, and sort of how their inventory outlook is for the first half of next year.
Nobody knows what's going to happen with tariffs, not even the Federal Reserve. As we heard from Jay Powell a little earlier, they're trying to model what's going to happen, but it's a little too early to do that. Hey, that is going to do it for our cross-platform coverage of the market close, our simulcast with Bloomberg TV and Bloomberg Radio right here at the close. We'll see you all same time, same place tomorrow.